The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the July 10th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone had a wonderful Wednesday. Let's make sure that we do all that we can do to have a terrific Thursday. And welcome to all our new eSignal version 12 users, the trading platform that is now integrated TigerTV as one of its media options as Interactive Data Company continues to bring unparalleled features for all of us users out there. So on behalf of all of us here at TFNN, we say welcome to the Hotel California, because once you do check into TFNN, you know this, folks, you'll never check out, and that is a beautiful thing, as our leader, Tom O'Brien, loves to say. Now, today and every trading day, you've got access to 9 hours of live programming with extraordinary technical market analysts, and each providing their own opinions as to what the markets are doing, where they're headed, and information that is knowledge that you're going to be able to use in your real-time trading. And all this takes place real-time, all day long. So our shows are really all about you. That means we provide an open forum for you to call in and speak to us about the market, a specific stock, a currency pair, commodity, whatever it is. We'll assist you as best as we can. We'll give you our opinion and information about where we think things are headed to and stuff you want to consider. Now, our call-in number is 877-927-6648. Again, my name is Steve Rhodes, and I'm the morning anchor that gets things kicked off each and every day, and I'm here for the next couple hours, and I'll do everything I can during this time period to teach you how to master the tools of trading. That includes tactical tools such as A to B equals CD patterns, Fibonacci expansions and retracements, Gartley butterfly patterns, and, of course, Japanese candlesticks, because those are the signs that the bulls and bears make for you and I each and every trading session. I'll also share with you trading strategies, because unlike most traders that only take a look at tactics out there, you and I know that to really achieve our goals, to really achieve our dreams, we've got to always think like a strategist. What I call Mastering Probability. It's also the name of my daily newsletter service. That's available here at TFNN.com. If you go to our homepage, down towards the middle section, you'll see a list of all the contributors here. If you click on my name, it'll take you to a landing page, and allow you to test drive my newsletter service for the next 30 days, no risk to you. So let's get things kicked off and make sure that today and every day that you and I, that we do everything we can to think like a strategist, because a strategist will slay the tactician all day long. It is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. We've got Dow futures trading off 170 points right now. They're trading out at 16,744. S&P futures off 19 at 1948. NASDAQ futures down 46. They're trading out at 38.39. Russell 2000 off 25 points, trading out at 11.46. King dollar up 100 ticks. It's up 10 pennies. It's trading out at $80.15. Goldilocks up 18 bucks, trading at 13.42. Silver up 43 cents, a little over 2%, up $21.50. Light sweet crude trading out at 102.09. That's back 20 cents out here. Quick peek across the globe. We're going to find over in Germany, the DAX is off 176 points, nearly more than 1.75% as we speak right now. The FTSE down 1 full percentage point, off 67. In Asia last night, a little bit of a mixed bag, but I think after today, probably won't be so much of a mixed bag tomorrow as we hand things off to Asia later on tonight. I do not see the market bouncing out of this. We'll go take a look at what's going on inside the markets. What makes me believe that? The Nikkei was off 86 points last night, about 0.5%. Hang Seng up 62 points, up 0.25%. And the Shanghai off 0.3%. Shanghai was totally flat last night. Now, why do I say what I just said about the markets, and I don't see the bounce coming here? Everything is right now all lined up. If you listened to the show yesterday, when we were taking a look at what was going on in the futures markets, we were focused on this currency pair, the euro, Japanese yen, the absolute single best currency pair for for trying to understand what the markets are doing. It's a leading indicator out here. Pretty amazing, huh? Leading indicator says the markets were actually kind of so-so yesterday morning. It was the Euro-Japanese yen, and I gave you a price target here, an initial price target of 138.75, 138.76 out there. And that's what we saw. This is a 120-minute chart, by the way, that we're taking a look at. And we saw that take place. In fact, it was as I was going off the air at 11 o'clock. Now, markets don't end on wide-ranging bars like this. What does that mean? It's an excellent question. What it means is you don't usually see a reversal the very next candle session. If you do, boy, that's a real important message. But likewise, inside the currency markets, inside the cross pairs, we don't have volume out there. But what we do have is we have candlesticks, and we can take a look at these wide-ranging bars. They provide us with tons of information out here. In essence, if we were to take a look at stock charts, we'll go find that most stock charts, all stock charts that really have a breakout are going to have high volume, and they're going to have a wide-ranging bar. They don't just simply, it's like fireworks or what have you. Now, there's a hammer candle back here inside the Euro-Japanese yen on its 120-minute time frame basis. That took place at 11 o'clock in the morning. That was on July 8th. Well, when priced this morning here at about 3 o'clock, things started falling apart in the markets out here. When it comes to this currency pair, between the 3 a.m. and 5 a.m. session, a 2-hour chart, what we're looking at, we saw price dip below that breakout area. That is never a good thing. Things coming back to a breakout area, that's what you want to do. You want to be able to be all over that. Well, in this case here, it broke through that. What that now does, that created what's called a Gartley sell pattern yesterday. That Gartley sell pattern has now turned into a 1-to-1 A to B equals CD to the downside. In fact, it hit that level. 137.58 is the actual projection number. In fact, you know what I'll do? I'll just clean this chart up for you. Just get rid of this last butterfly. Let me see if I do that. That'll clean it up. Maybe go ahead and get rid of this as well. That way you'll be able to see the A to B equals CD pattern. So that's a lightning bolt pattern. They had a point here, started at 5 a.m. That was on July 3rd. That high was 139.26. That was your A point. Your B point was the hammer candle. That's the one that came in at 11 o'clock in the morning. That was on July 8th. It makes a retracement up in that nice wide-ranging bar. We've now seen a sell-off, but the angle at which this thing has descended tells me that likely what we're going to see here is more than a 1-to-1 A to B equals CD. We're seeing a little bit of a bounce. If you're watching us on TigerTV right now, you're seeing a little bit of a bounce here. That's to be expected. Why? Because it's in an oversold condition. Once you get below that 30 level of that relative strength indicator, what you should be expecting is at some point in time in the near-term trading sessions is either a move sideways or a bounce. So it has completed the 1-to-1 A to B equals CD to the downside, but it did it with what? It did it with a wide-ranging bar. That says that we ought to see inside the Euro-Japanese yen is more than a 1-to-1. That means that your next level, your next Fibonacci expansion level, becomes 1 to 1.272. That would take you to 137.26 out there. But will it stop there? I don't think so. That then focuses, we now switch to the intraday chart into the daily chart out here. And this is where all of the information is really going to come from. If the bulls are out here, then on that 1-to-1 A to B equals CD, they are going to show up. And we will see some kind of reversal candle. And if we do, that's what would stem the tide that has now gone out to a C out here. And if we take a look at the daily chart, the last bastion of hope at this stage that I see inside the Euro-Japanese yen is a trading session from June 12th. That low is 137.65 out there. You can see that that area has been tested. If we see a close below that, number one, we're going to go ahead and see the little rising price channel. So if you're watching us on Tiger TV, this is a longer-term rising price channel. By saying a price channel, I'm using the actual body of the candle. Doesn't matter whether it's an open or a close. And I'm identifying the largest number that I can come up with. And this is a price channel taking us back a full year. July 24th, 2012. Now, as price gets down there, it's possible that price will hold. And if it does, it says in the Euro-Japanese yen, the uptrend is still in place out here. But now let's go switch over. Let's take a look at the weekly chart out here. And why am I spending so much time on this for you? Folks, it is because of this. This market is all about currency. It's all about where the dollars are flowing. And if you can get your head wrapped around the liquidity gauge, which is really the Euro-Japanese yen, at this stage it has tracked the U.S. markets better than anything else, then you can get your total head wrapped around what is going on out here. Now the threat, you can see on the weekly chart out here, this is a weekly chart now for the Euro-Japanese yen that I just punched up on the screen out here. It too shows its rising price channel. But here's the thing. You see this red line? This is a good red line. This red line going across horizontally on my screen out here, that is an old area of resistance. And that means that this level should hold. That red line. And it's really right around the area. I'm using about 138. We're using about 138 even Steven. Right now, it is trading out at 137.66. We're right in the range. It could go, some pips higher, a little bit lower out there. But any move down below that says that the move higher in this currency pair was a false break topside. And that becomes a problem longer term. Now, it may not be so much of a problem as price comes down and tests about the 134.12 level. Hey, look, here's the deal. If it gets down to 134.12, I can promise you one thing. You're going to see some major carnage inside the marketplace out here. That's what this liquidity gauge of the market is communicating to us. So why do I expect the 134.12-ish area? If you take a look at us on Tiger TV, you're going to see a number of horizontal lines out there. Those are what are referred to as the primary trading range boundary lines. And price inside the Euro-Japanese yen, that's why it's a little bit darker blue line on my screen out here, that is where price is most comfortable, around 134.12 out there. That happens to what? Intersect with that rising price channel. And it is as if that rising price channel gets broken, then all bets are off. And you can expect a summertime out here that probably has quite a bit of carnage. Of course, we'll see when the markets open. That VIX index is going to take out the 50-day exponential moving average. By the way, that is priced out at about $12.04 right now. And it closed today above $12.04. That ensures more carnage in the marketplace. So if you're long out there, and we'll take a look at different time frames during the next couple hours. We'll take a look at weekly and monthly. No action necessarily has to be taken today on your weekly and monthly, but it's going to pique our interest. So as long as the VIX today closes above that 50-day exponential moving average, 1204, you'll have two liquidity gauges, because that's really how I take a look at the VIX index. You'll have two liquidity gauges pointing to much lower price. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 50 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got Dow futures are off 177 right now. S&P futures down 20 points. And, there are some things that are popping to the upside. If you are holding on to Nugget, if you've got the daily ETF for the gold miners out here, closed at 49.71 right now in the pre-market trading at 52.61 out here. You've got AMREIT Inc., AMRE is a ticker symbol, closed at 19.20. She's traded out at 21.98 out there. As I said, gold is up about $19, silver up 47 cents. To the downside, Tractor Supply, TSCO, they were out with numbers here. They reported net sales of $1.58 billion. That is disappointed. Not necessarily, I don't know if it's the revenue number that disappointed, but the stock is trading out at $57.70 out there. It looks like that's going to take out a swing point from June 27th. That can set up a huge A to B equals C to the downside. We'll take a look at that during the trading session. If you're a holder of Potbelly Corp., you'd almost have to ask yourself why. This thing here was an IPO, so a restaurant chain out here. The total opposite chart of something like Chipotle or what have you. This thing had an IPO back on October 4th, 2013. Got up as high as $33.78. This morning here, it's been in a steady decline really ever since. It took 2 days before that decline before it couldn't really be a key reversal session, only traded for 3 days out there. But big bearish engulfing candle at the top, that's for sure. And this thing now is trading at, $11.80 out there. Don't be bottom fishing for that one, that's for sure, especially right now. Now, let's switch back. Let's go take a look at what's going on inside the futures market. So we covered the currency pair. That helps us to understand what's going on. Well, currency pair in the VIX index. And we know, anything can happen. I can't control what the markets are going to do next. But what I can tell you is what they're doing now and what that meaning is and the type of action that one could consider. Let's go take a look at the four futures contracts, the daily contracts out here. And the first one we're going to start with is the NASDAQ futures. Why the NASDAQ futures? Look, not only was it a leader on the way down into the February 4th and then again into the April 15th level, it also was the leader on the way up. And if you were listening to the show yesterday, we were taking a look at the different market profiles that are out here. It formed a new one yesterday, and that has been taken out from a support level. That's at 38.6640. If somehow, and it could always happen, the NASDAQ closes up above 38.6640. Boy, that would be one heck of a bullish move out there. That's a number to be paying attention to. What is likely to happen out here inside of the daily chart for the NASDAQ futures? Likely to head down and maybe to find some support right around 37.98 or so. That is an old level of resistance inside of the NQ out here. We'll see if old resistance can become new support, but the NASDAQ here is beginning to crack. And if we take a look at the NASDAQ on a 120-minute time frame, let's go do that right now. There are three tools that I use, three primary tools, I should say, three primary charting tools that I use to help me identify what's going on inside the stock market. All are fed by the e-signal data system, have been, always will be just simply because of the reliance upon the data and the accuracy, and that's what we need when we're taking a look at trading and everything coming in from all the different exchanges out here. Now we're taking a look at the NASDAQ. If the NASDAQ is going, if the signal this morning, the signal today is really going to come from the NASDAQ. And inside the NASDAQ, because it has been a leader on the way up. And if that begins to crack, that'll lead the markets down. The Russell 2000 and the NASDAQ, those two need to be in bullish mode in order for the markets to move higher. When they start leading things to the downside, it's not a good scene. The Russell 2000, we already know that we'll go take a look at that stock chart today as well, just to read its message. But what we do have going on right now, as we're speaking, with the NQ trading out at 38.36, it's moved lower with a little bit less relative strength out here. But heck, they have not released the hounds yet. The doors have not opened. That's going to take place in 2 minutes or less out here. And I suspect that this divergent pattern that is appearing here, it's only a pattern. One really needs to understand and learn how to trade this, because it is one of the most reliable reversal patterns out there. It's not the only one, and it doesn't always work, but I will tell you, when it fails, boy, it gives you tons of information. And you got to love patterns that both work and identify reversals, and it works so often. But in this case here, we'll need to see a big reversal. I suspect what we're going to see is we're going to see prices, we're going to see when the hounds get released here this morning, we're going to see this pattern void itself. We'll see the relative strength indicator on the 120-minute time frame move lower, take care of this price relative strength divergent pattern out here. However, price will be in an extremely oversold condition. But I think today, right off of the shoot out here, based on what we're taking a look at in the currency pairs, what the bulls really need to do is they're going to have to really step in to reverse things this morning. And I think that the riptide just seems at this stage to really be pointing outward, downward. 877-927-6648. When we get back, we're going to see how this market is dropping and whether or not it's going to be popping. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow down 159 points. She's trading out at 16,827. S&P off 19 at 1954. NASDAQ Composite off 64 points, down 1.5% this morning, trading out at 43.55. Russell 2000 off 20 points, trading out 11.53. NDX 100 off 47. New York Stock Exchange down 125 points to lead the thing. How about that? Leading things to the upside out here. It's AmREIT Inc. up 14%, up $2.80. Let me see, what do we have here other than direction type shares, pro shares? You got United Airlines popping this morning up 5%. That's up $2.11 out there. So that's fighting the tide. You've got Agnico Eagle. Yeah, well, of course, with gold trading up, that's up 2.5%, up $1.06 out there. To the downside, you've got Baidu. Baidu off 4%, down $7.80. Sarepta Therapeutics, interesting. We're going to go take a look at that stock chart. That is down $6.70. That's off 26%. Now, let's go take a look at that. Here's a stock that was pulling back into a breakout area. I've been watching it. And let me go, let's see, it's going to be on one of these tabs out here. Show up. There we go, show up. Let's see if it was showing up. Yeah, no, how about, so here's Sarepta Therapeutics. Very interesting. Now, this is quite a wild stock out here. What I mean by wild stock is on the trading session, if you watch this on Tiger TV, you'll see back on July 23rd, this equity was trading at $3.40, $3.50, 60 cents. Gaps up with nice volume, big volume. And for this equity, 4.5 million shares out there. Continues moving higher, and then it really broke topside with volume. That was on the trading session of October the 3rd out there. 27 million shares. Went ahead and came back. Did not come all the way back to the breakout area. Just inside the gap. And when things are inside of a gap out here, you see a breakout. A gap is nothing more than wide price spread accelerated volume. All you really have to do is fill in the blank. How about that? And what I mean by fill in the blank is fill in the voided space out here. And what you're looking for is, if you're always looking to buy breakouts or sell breakdowns, in this case here, you want to see things. That's why when we say a gap might get filled, all we're really saying is price is going to come back to the breakout area. And if it's coming back there on light volume and it holds, that's why that's such a great support level. Same thing on the reverse to the upside. Now, saying that, what Sarepta Therapeutics does have, and that's where price is headed to right now, is its most recent high volume low. November the 12th, down with 38 million shares. Made a full 1-to-1 A to B equals CD to the upside out here. It completed that on the trading session. It also closed the gap out here, tried to close the gap that was created from November 12th, so it came back to a breakdown area, and that was on trading session of April the 21st. But here's what's interesting. So I was watching this, I was looking at it yesterday. It did have a nice breakaway session on April 21st. It broke topside with 13 million shares. And yesterday, as it was moving down, it never got down to actually test the breakout level out here. That was yesterday, coming back with 2.5 million shares. The day before, 2.3 million shares out here. And the thing that was stopping me from even entertaining taking a look at this equity was this high volume low down here from the trading session of November the 12th. It looks like that's where Sarepta Therapeutics is likely headed to, between 12.35 and 16.70 out there. What else do we have that is moving to the downside? You've got Tesla off $5, Zillow down 5. You've got Regeneron Pharmaceuticals off 2 points, Mohawk Industries down 4. Let's go take a look at some of these individual stocks and see what they're doing out here. Let's take a look at to the downside. Let's look at Baidu. We haven't looked at Baidu for a while. Let's go see what it is doing out here. Let's look at the daily chart. Baidu is off $5, down about 3%. Let's go see what it is now doing. Now, Baidu yesterday and the day before came down, and Baidu had reversed modes after it's moved down into the April 7th time frame. If you're watching this on TigerTV, you see some horizontal lines going across our screen out here. Those horizontal lines are support and resistance areas. The green lines become support. The red lines become resistance. They are the market profiles provided to us by our friends at TAS. Now, you can see how as Baidu was moving off of the bottom here, you can see the price never broke through the support level, the green horizontal lines, all the way up. The last time that there was a market profile, this one, the most recent one, formed 3 days ago. Last time a market profile formed was June the 19th. And the level was tested for a couple of trading sessions. If this pattern, if Baidu was going to continue moving up, it would have really done the same thing this time around as it did last time around. And that is that there was a new market profile, came on board July 8th. That level was tested. It was held yesterday. Now you're seeing price close below it. Look, there's a full trading session today. If Baidu holds above 182.19 today, then all we'll have seen is an extreme emotional move to the downside. If, on the other hand, it closes below 182.19, this tells you that Baidu is changing its character. Where is price likely to move to? Well, the very first thing we want to do on a stock chart is go take a look at both swing points and volumes. In the case of Baidu, you really have to say that the real swing point out here ends up being down here on the trading session of April the 7th, which, by the way, also happens to be a big volume trading session, 10.3 million shares. So it looks to me like Baidu is probably headed to that range, somewhere between 140 and 149 or so. It may find some support right in this vicinity of the trading session from April 25th, and that's at the level of 167. So that's going to be what looks to me to be your first level of potential support inside Baidu. If it closes inside 167.36, I mean below 167.36, that will set up the move to the downside out here. If we take a look at what else do we have? We took a look at Sarepta. Let's look at Zillow, not to be confused with our man Z in the Tiger's den. If we take a look at Zillow, it's trading down $5, down 4% this morning. This is trading into its what? Into its market profile support level. That's priced out at a price point of 126.53. If that holds, Zillow would then still be in a bullish type mode. Volume so far out of Zillow this morning, 238,000 shares. It made its high back here on the trading session of June 30th with 1.7 million shares. So volume was not too bad inside of Zillow, because the prior session, June 27th, had a nice little move to the upside out here with 5 million shares. Zillow right now probably finds support here, but if it closes below 126.53, it too will be changing its character. Now, where will Zillow head to? Well, I'd have to say it almost looks a lot like the chart we just looked at for Baidu. Its first level of potential support, It doesn't look exactly like Baidu, but the trading session here from May 7th is probably the area where it would target somewhere 103.50 to maybe $93. It's trading out of 128.01 right now. 126.53. That's going to be the key number to be paying attention to inside of Zillow. Let's take it look at Illumina Inc. ILMN. That is off about 2.5%, down $4 out here. This stock chart looks a little bit like Zillow as it is trading into its support level. Now, this has a market profile that was formed 3 days ago, and if we take a look at where its support level is at 169.88, because of the closeness of the larger profile, the one prior to that, that gives us support at 166.67, we'll call it. I would say that becomes the real support area for Illumina, and really right at that level, it takes you back to the June 5th trading session where you got 5.8 million shares out there, the top of which is 168.47. So I'd say it's at 168.47 right now that that Illumina Inc. Illumina is looking for support as we speak right now. It's a nice little breakout, nice volume on that trading session. If it can stay above that, things look okay at this stage. Let's look at something that's moving to the upside out here. Let's look at Cray Inc. CRAY is the ticker symbol. They were awarded $174 million supercomputer contract from the National Nuclear Security Administration. So on that news, this thing has popped higher. It's trading out at $30.04. Volume behind the move this morning, 161,000 shares. Let's go see. Looks like this thing has broken its trend line. If we take a look at a recent trend out here, we're going to start with the trading session from March the 21st. Whoops. That was the line tool. I grabbed the wrong tool. Let's go grab the trend tool out here. So we're going to start with that trading session for March 21st. That'll be our first touch point. And if we take a look at the trend, and it broke the trend that did it on the trading session here right around June 13th. What it did have was a nice little sign of strength, small, albeit, nice little sign of strength out here. That was on June 17th. Looks like if it can take out the level here from July 3rd, and it should be able to do it. That only has 238,000 shares. The price high out there is $29.97. It's trading at $29.98. If it can take that level out, let's go look at the A to B equals CD pattern that would be forming out here. The A point is going to take us back. We'll use the trading session of June the 12th. Your B point is going to be the high from July 3rd. The C point was a retracement down on July 8th. So if it can close above that, the 1-to-1 A to B equals CD takes you to 31.94, and it would make sense right around this 31.94. I'd have to say more likely the 32.23 to 33.37 area is where Cray probably runs into some problems. All depends on volume. Had a little downdraft session with 1 million shares on the trading session of April 3rd. So if we can get some giddy up and go today, if we can get more than more than 1 million shares going today, and today would be the day. It's already done 175,000 shares. Then it can clear that little supply line, I'm saying, because you had a downdraft, a little bit of downdraft with 1 million shares. That is on Cray, the supercomputer folks out there. Now, we've been trading here for 15 minutes. Let's come back and let's take a look at our intraday time frame charts to get a feel what's going on. So now we'll do the minute clinic update out here. We're going to take a look at the NASDAQ futures. I believe it's from the NASDAQ futures, from the NQ, where we really get our cue in the market as to what it wants to do. Now, we're seeing here that prices move lower. It's done it on less relative weakness at the moment, but that does not mean that it will not continue lower with more relative weakness. We have not seen any kind of bullish reversal signal or anything. So this pattern here really is not intact. When I say not intact, anything more than just being aware of the potentiality, if that is a word out there, of that pattern. But I'm not seeing any signs here inside of the NQ that suggest that a reversal is imminent. If we go take a look at the other three futures contracts, again, I'm looking at all 120-minute time frames as we speak right now. Now we've got the S&P futures. You can see that has my system here. I've developed this system. It's a proprietary system out here. I've developed this with the Ninja Trader platform, and you can see here I mark each time it's made a low, so I'm just keeping track of the, just visually I can look at something quickly and see what's going on. We're not seeing any kind of bullish reversal, not as of yet, just yet. This has been moving lower as well with a little bit less relative weakness, but it does look to me like that wants to be taken out. Now, I've got to go back and take a look at the currency pair that we started with as well, and I'll do that not right this very second. I'm going to switch over on a different chart just so I can, or on another one of my screens to take a look at it. Yeah, so I'm not seeing a reversal there on the 120-minute time frame. I'm seeing what we would have expected, which was after doing a 1-to-1 A to B equals CD, a move sideways from the standpoint that it's in an oversold condition. That's I'm referring to as the Euro Japanese yen. I'm just watching that on a different screen. Let's take a look at the Dow futures out here. Let's go see what kind of pattern it has, what kind of candles it's forming out there. Right now, it's also trading lower, as you can see, which is slightly less relative weakness than the trading session from 12 noon, and that was back on July the 8th. No reversal signal here. No reason to believe that this change in there's no indication yet that the buyers are out here trying to rush in. So we've got one more to take a look at. That's going to be the Russell 2000. Now, this has got just a slight delay in it out here, but you can see it too has this potential relative strength price divergent pattern that is in play. Are they important for us to pay attention to? They absolutely are. Last time there was a price RSI divergent bottom out here. That's the one that formed back at around 12 noon or so, and that was on June 13th out there. And you can see that led to an A to B equals CD to the upside out here inside of the Russell 2000. Let's go take a look at the ETF structures out here. So on the 120-minute time frame, we're not seeing any real signs there of any type of bottom in place. Let's go switch over and take a look at what's going on inside of the ETF indices structures out here for you. Let's go take a look at the strong dog. Let's look at the Qs. Let's look at the Qs on a daily time frame first. What we know about the Qs, that the QQQ formed a nice 1.618 expansion, and that expansion was from the swing point here on the trading session of March the 3rd, that high, 91.36, down to the low that came in on the trading session of April the 7th, and that was out at 83.28. Oh, I'm sorry, 83.28. That was the trading session of April the 14th. Very close to hitting the 1.618 expansion. 96.35 would have been the number out there. This is the weekly chart I've got on my screen. I'm going to switch over and we'll take a look at a daily. But what I want to point out to you on the weekly chart out here, what we have not seen inside of the Qs, that may be changing here today, maybe changing, well, it'd have to change tomorrow because this is a weekly chart out here, would be a reversal candle. And so if the Qs are able to close below last week's open, that open, by the way, is priced out at 93.71. You're trading 93.76 on a weekly basis. You would get a reversal signal inside of the Qs. When was the last time we saw any kind of reversal signal inside of the Qs? Well, that took us back to March the 10th, and that's what then took price down to that swing point on the weekly basis down on April 7th. And I would say if the Qs close underneath 90.55, we're a long ways from that. That is likely what will happen is a test of the April 7th area. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better, a 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability, available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. You've got the Dow is off 157, S&P down 17, NASDAQ down 60, Goldilocks up $17 right now, silver up 46 cents out here. Let's switch over to a little screen out here. It just shows me what's going on inside all of the sectors within the S&P 500 out here. And there is basically, and these are the top 10 holdings in each of the sectors out here. And, boy, you take a look at the XLK, top 10 all in red. The financial sector out here, they also are all in red. I take that back. Verizon inside of the XLK is up about 0.5%, up 23 cents. But what I want to do here is we're going to focus in as we close out this trading session here. We're going to focus in on GE, the general out here. We're going to go get a view of the message as to what it is doing. It's down 14 cents. Not a big deal, off about 0.5%, trading out at 26.18. But what is a big deal, and this is what we'll watch during the trading session today. General Electric had a nice little breakout session on April 17th. 69 million shares to the upside. The top of that, I'll put the line across. Let me just do this here. Let me turn off a couple of things so make it a little bit easier to look at the charts. So let me just come into the... Let me get rid of those. Let me get rid of that. Let's get rid of this. Let's keep the volume, and we'll keep the price relative. Okay, so we got a little bit cleaner chart out here. Now I'm going to put a horizontal line on my screen where that breakout took place, and that was at $26.20. That was the high from the trading session. I'm sorry, that's the low That's the high of the trading session prior to the day's breakout, 69 million shares. You can see that as price pulled back there, it's tested at 1, 2, 3, 4, 5 different times out here. And today it appears to be breaking through that level. Now, volume here, so far this morning, 5.5 million shares. So you've got a couple different benchmarks. One benchmark is the swing point, the current swing point of a potential A to B equals CD to the downside. And that's from the trading session here of June 26th. Now, only 23 million shares out there. Look, we've only been trading for 26 minutes, and you've already got 5.7 million shares to the downside in GE. So with that being said, 5 million versus a breakout of 69 million. If volume were to keep up this pace here today, it's got enough volume behind the move to even take out that break out session. So it's below a swing point, and what we could be seeing here is an A to B equals CD to the downside form. What does that mean? I'm going to use the swing point high from June the 9th as my A point. My B point's going to be this swing point low here from June 26th, and my C point's going to be this move up onto July 3rd. 1-to-1 A to B equals CD to the downside. Takes you to $25.56 out there, but we have to be careful. Let me pull this back a little bit further. Is there any other volume bars that we need to be watching here? No, I'd say the volume bar, what you're dealing with here is that trading session from February 3rd. That volume down there is 75 million shares. So if you see GE close below 26.20 today, because we've got some volume in it, that too is suggesting that is going to probably move down to the 25.20-ish area at a minimum. That would be the 1 to 1.272 A to B equals CD down, and approximately the tie of that high volume low bar on February 3rd. That's at 25.21. So that's the range. And why is all that important? I'm glad you asked me that question. It's going to be because of this chart here that I put up on the screen for you. So let me put this up here. This is a chart. This is the correlation chart between GE and the Dow. And what we are now seeing, I'll have to do it during the next show, folks. So I'll do it during the first segment of the next show, the Money Master Show, which you can always get archived on Channel 10 if you're off to start your day. What I can tell you is GE is a great indicator as to where price is going to head, especially when there's divergence between GE and the Dow. Both now having broke a trend line. The last time that we saw that take place, the markets went quite a bit further south. So, folks, thanks so much for joining us, all you new eSignal version 12 users. Thank you. And guess what? You now have checked into the Hotel California. Stay tuned, folks. The Money Master Show is up next. I'll see you tomorrow or see you in a few. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.